I think there are two things going on. It's a lot about the actions the central banks are taking. The taper talk is very limited. There's no doubt that the asset purchases have had a huge impact on the equity markets. They encourage risk taking. They've lowered the equity risk premium, and that's inflated asset prices. But I think there's something more important going on, and you just referred to it with the discussion on air travel, and that is the earnings growth is far more robust than we expected a quarter ago. So we're looking at 60% year-over-year earnings growth in the U.S., and even more startling is the fact that the expectations have gone up by 10% just in the last 3 months. And that's never happened before. As you know, guidance usually walks earnings down. The exact opposite is happening right now. So there's just a lot of fundamental momentum in the stock market, and that's a good thing.
And I know, listen, the good news is that the mRNA vaccines have shown to be very effective against the known variants out there, like the Delta variant, which is scaring everybody. Got this Peruvian variant that is coming out. Americans are doing what they want to do. Are we underpricing risk? Because we talk about with OPEC, they're worried about more lockdowns potentially crushing global demand, which is one reason they're wary about adding more barrels. Are we underpricing that risk, Hal?
I think it's a very good question. As you know, VIX is back around 15, which is very close to the long-term average. So, certainly VIX is a very short-term measure of anticipated risk. It's fairly backward looking, but I think you're right. We're still seeing between 300 and 400,000 new cases a day globally. And the trend down, which had been in place for some time, has sort of ceased temporarily. So I think that's a good point. And I'd also argue that inflation risk really is not fully priced into the market. I think, again, the asset purchases play a large role here. You look at the U.S., where in the last meeting, the Fed said we expect inflation at 3.4% this year. You're getting about 1.4% in the 10-year Treasury. So the real yield is hugely negative. I think it's distorting prices. So I agree. I think risk probably isn't fully priced in.
But if 10-year yields continue to stay where they are or even maybe move lower, if oil goes up, yields could move back down. Does that give the all clear for technology stocks?
Well, in the short term, absolutely. There's no doubt about it. We saw that in the second quarter when yields backed up 25, 30 basis points and the mega cap techs took control again. I think in June, they outperformed the market by 5-6%. And so you're absolutely right. And, short-term expectations really drive valuations.
Shepard Smith here. Thanks for watching CNBC on YouTube.